Hello, everyone, and thank you for tuning in. Today, we're just going to be looking at another update with Bitcoin and its US dollar valuation. Remember, if you do like this video and the other videos that I make on this channel, be sure to hit the like button down below and also consider subscribing. Well, yesterday was an interesting turn of events with Bitcoin. We did see a fairly large wick, relatively speaking to uh, recent price history. I think the next largest dip, if you want to say, would have been this 10% dip on September 3rd, and after that we saw an 8% dip in the end of November, on the 26th of November. Yesterday was 7%. It closed at $35,455. It went as low as $30,000, coincidentally, right at the 20-day moving average. Today, it seems to be continuing the trend, or this recent trend. You can still argue that the macro trend is still up. However, we're down 5%, 5.5%. We're at 33,500. And I was gonna make earlier today. I saw the price, and it wasn't down 5%. It was up, and I was gonna make a video about this is the where the dust settles, and where are we at? Um, Evidently not. It could potentially be that we are not out of this yet. And funny enough, this is the fourth weekly daily candle in the red. When's the last time you saw four? If this closes down, when's the last time you saw four red daily candles? And I can tell you, it was. Um, if I can actually, get rid of this moving average here, it was in October. Sorry, September, October. From September 29th to October 3rd, we saw red wheat daily candles in concession, four of them. Now, mind you, that those span of daily candles are a lot different than these span of daily candles. But I think it's just interesting to see, you know, how far we've come. And this is kind of the video that I'm thinking of shaping this to be. And when we zoom out, and we see this explosive move, it's almost kind of expected. We were waiting for this to happen. We didn't know when it was going to happen, but it happened. uh you know you could argue that it happened on the 9th of January, and here we are, roughly 20% down from the peak of $42,000. Yeah, we're at 19 and a half. So, um because the dust has not settled just yet, it's hard to make any decisions, and I think that's what I'm going to try to shape in this video today. It's too early. We don't know how far this is going to go down. It could very well stop at the 20-day. And we kind of saw that yesterday. We wicked down, we came back up, and here we are. However, the last time this happened, um, it was actually last week. Funny enough, but we saw the price go straight down. It was here to $27,000, but get bought back up, and then it continued the trend upwards. Here we see kind of the similar situation. We saw a lot of orders get bought up, but it wasn't enough to change the momentum, on at least in the daily sense. Here we are. We're going further down. We're at 4.5% now, down for today. And it very much looks like we will be making contact with the 20-day once more. It seems almost inevitable. However, it doesn't. I mean, something extraordinary can happen today where the price continues to go up. But it seems at this point the 20-day contact with the 20-day, and potentially a longer term contact with the 20-day, where we might see, for example, this scenario here in November or December, where we saw Bitcoin kind of hug the 20-day for quite a long time, for a number of days, from the 26th to you can argue the 15th of December, roughly roughly 20 days, that we might see that happen again. Now, in the previous video, I said another possibility is that we break further down. We break past the 20-day moving average. And for the past, couple months, the 20-day has been the line of support. Now, it's not the most reliable line of support, as you can see. If we zoom out here and we look at, say, this bull market here, or from March upwards, eh, the 20-day is not as reliable. The next obvious line of defense would be the 20-week moving average. And right now, the 20-week is at still $18,200, and we're still far, far away from that. We're still it's almost like you cannot even look at the 20 week, and because it's so far down, it's not even on your radar anymore. But I think considering the last time it's been since we hit the 20 week, how high we've come above the 20 week, it almost seems just as expected for this run to say a correction is coming. It almost seems equally so to say that an we expect it to make contact with the 20 weeks soon. It does not have to, but it seems like that is the case. I hope um, I hope it doesn't, because I would think that if it does make contact with the 20 week, then all coin positions are gonna bleed significantly, because the 20 week is a very tense area to be in. I don't know if you remember this part, but for me it was quite tense. It's the first test of the 20 week for this run. We held it, and look what happened after. It could very well happen where we come back down and move sideways. We come back even further down. Maybe we range around $30,000, move sideways, and eventually the 20 week will come to us. Eh, Also, remember, we do not have to go to the 20 week. The 20 week eventually will come to us. It's a better way of thinking about it. I mean, like this is a not a great example, but you could see the price did rally. We were pretty high above the 20 week, but we moved sideways. And then when we drop back down, the 20 week is a lot higher. In fact, it was 20% higher when we came back down to when we before in comparison to when we left it, when we rallied up. So again, the 20 week or any kind of moving average is a lagging indicator. So it will catch up to us. Even if we kind of move sideways here, the 20 week will catch up. And it's roughly coming up $1,000 every the past week. If we just take that difference, it's $1,100 every week. When you take into consideration, past few weeks, it's around $1,000, just under $1,000. The longer we stay, moving sideways, the less difference it's going to be week to week. But for now, it's around $1,000, and so with it at 18,000 dollars, I can bring out my calculator here and take the current price. It's roughly 15 weeks for the if Bitcoin stays at the exact same price, and the moving average stays at $1,100 gaining per week. It takes about 15 weeks, and that takes us to about the end of April. Having said that, I think this is a crude way of extrapolating a projection for the 20-week moving average. As I said before, the longer we stay sideways, the more, the 20-week will begin to plateau. At some point during this window, Bitcoin should, if it does move sideways, it should either drop or then continue moving up. And if it moves down, then obviously the time required for the price to make contact with the 20-week drops because we're moving closer to it ourselves. But with this, I mean, it's only Tuesday. Uh, there's still a lot of price action to go for this week. We'll see in the coming weeks, the coming days, how Bitcoin will fare. The first target is the 20-day. The next target will be how close we get to the 20-week if target one fails. So that's what I'm currently looking at. And the dust has not settled unless we start, and even still, like even if Bitcoin stayed at roughly $35,000, there's an argument to be made to say that the dust has not settled yet because it's only been a day, right? We want to talk about consecutive uh, 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 long-term days, like a several amount of candles, of sideways action to say, okay, the dust has settled. But even looking at today, we see a positive response with altcoins. Altcoins are rebounding. Ethereum is at least staying the same. Chainlink is up 1.5%, 2.5% for Uniswap, 4.5% with basic attention token. I saw it was at 6% at one point today with Cardano against BTC. So the Bitcoin valuations of altcoins are staying fairly, at least along with Bitcoin or slightly outpacing it. The only outliers I would say would be either Monero or Cardano, and even XRP for today for some reason. Um, so for now, I think for me, it's kind of just a wait and see. It's I'm not buying Bitcoin at this level. I could tell you that much. I know there was some people that bought the dip, and you could argue that this wick shows that people were buying the dip, and and when they were doing that, they're probably anticipating a similar move to what we saw last week, where there's enough people buying the dip to revert the price and continue the trend. At the moment, right now, that it seems that the buyers are a tad bit exhausted, as they should, because I mean they got the price from $10,000 to $42,000. Uh, that is an amazing feat, and we'll see how this continues and transpires. But keep an eye on the 20-day moving average, and keep an eye on the price of Bitcoin. If it breaks the 20-day, and then continues down, then I'll definitely be making another video about that on how, and then seeing how far we are from the 20-week moving average, when that time comes. At the same time, I think it's important to see now, considering that we're down 11.5% for the week as of recording. This is not set in stone yet. There's still 5 more days of price action until Sunday. But when we look at the distance to the moving average, we're now 84% above the 20-week moving average, in comparison to last week, which was 123. With the RSI, we are at 79 on the RSI now from the high of 94. So if this continues to go down, we can definitively say well, it's the RSI has showed us that, um, it's not a specific number we were looking for, but we knew at this level, you guys, that Bitcoin is extremely overbought, and as price history shows, that it can come down. From the highs of the high 90s to as low as to the lows of 80 on the RSI. We've seen that happen as well. And it's just a good indication of where we are in terms of the velocity of price action to the upside with Bitcoin. I'm not saying to sell, you should have sold all your Bitcoin at 83. nor am I telling you to sell everything when it hits 93. Um, uh, I think for me, those indications show, okay, you know, I sold a little bit. I think I sold a little bit around, 78 RSI when Bitcoin was at $26,000. Let's see. Actually, I sold it around 90, so pretty good timing. Anyway, so regardless, I think the RSI is a good indicator to show, how overbought Bitcoin is, and should you start taking some profits. And in hindsight, we're at 33,000 on Bitcoin. I sold at 36 and I sold at 26. I would say that I'm quite happy with the trade that I made in taking some profits. Now, that's not all of my Bitcoin. It was roughly 8% of my Bitcoin holdings, and less than 10%. Okay, it's not the majority of my Bitcoin holdings, because I still believe this still has a lot of room to grow. Having said that, it's never a bad idea to take profits wherever you might be. And if you're up 5, 10, 15 times above your cost basis, uh, I, I personally will never fault you for deciding to take some profits. As a matter of fact, I'll buy you a coffee. And I think I want to instill that to anyone who's watching this video and other videos on my channel. You know, uh, that taking profits is never a bad thing. Never a bad thing. Anyway, that's all for today, you guys. Thank you so much for watching. Take care. Bye bye.